The global oil market is swinging wildly as the war involving the United States, Israel, and Iran continues to shake energy supplies and financial markets. In the past 24 hours alone, oil prices have moved dramatically. Crude briefly surged to almost $120 a barrel as fears grew that the conflict could shut down energy flows through the Strait of Hormuz, the narrow waterway that carries about one-fifth of the world's oil supply. But prices later fell sharply after US President Donald Trump signaled possible sanctions relief for some oil producing countries to stabilize the market. Speaking at a news conference in Florida, Trump said the US could temporarily lift sanctions on certain oil producers until the crisis passes. We are going to take those sanctions off until this straightens out, he said, suggesting the move could help bring energy prices down. Trump did not name the countries involved, but Washington currently maintains oil sanctions on Iran, Russia, and Venezuela. According to reports, the administration is already considering easing some restrictions on Russian oil exports, and the US Treasury has announced a 30-day waiver allowing Russian oil sales to India. After Trump's remarks, oil prices pulled back, with Brent crude trading around $84 a barrel. Even so, energy markets remain extremely tense. Prices are still around 20% higher than before the war began, and analysts warn that the situation could escalate quickly if shipping through the Strait of Hormuz remains disrupted. Iran has threatened to block the waterway, and Trump has issued a direct warning. Posting on social media, the US president said any attempt by Iran to stop oil flows through Hormuz would trigger a response 20 times harder from the United States. The uncertainty has kept traders on edge. Analysts say the oil market is now in a constant tug of war, with prices jumping on escalation fears and falling when signals of de-escalation appear. Financial markets are reacting too. After heavy losses earlier in the week, Asian stock markets rebounded with Japan's Nikkei rising more than 3%, Hong Kong's Hang Seng gaining nearly 2%, and South Korea's Kospi jumping more than 6%. But governments are preparing for the possibility that the crisis could worsen. The G7 nations say they are ready to take necessary measures to stabilize energy supplies, including potentially releasing oil from emergency reserves if prices continue to spike. At the same time, the war is reshaping global energy politics. Russian President Vladimir Putin says Moscow is ready to resume oil and gas supplies to Europe if European countries are willing to restore long-term cooperation. Europe sharply cut its reliance on Russian energy after the invasion of Ukraine, banning maritime imports of Russian crude and reducing pipeline purchases. But with shipments to the Middle East now disrupted, Putin says Russia could again become an alternative supplier if Europe chooses to return. Before the Ukraine war, more than 40% of Europe's gas came from Russia. By 2025, that share had dropped to around 13%. Putin's comments also came as Hungary called on the European Union to reconsider sanctions on Russian oil and gas, arguing the Middle East conflict is pushing global energy prices dangerously high. For now, the global oil market remains extremely volatile. If the Strait of Hormuz stays blocked for weeks, analysts say the prices could climb to $150 or even $200 a barrel. But if the conflict eases, prices could fall just as quickly. In other words, the global energy market is now moving in real time with energy headline coming out of the Middle East.